All right, folks, how we doing? It's our midweek commentary. All right, so we had dollar index trade up into this short-term high here and has fallen out of bed a little bit intraday. Completely closed in this fair value gap. Now remember what I said about the volume imbalance over here. If we trade above it and we come back down into it, I want to see, does dollar find some support here to send it higher to attack this buy-side liquidity pool and completely close in this volume imbalance over here. So that's what I'm going to be working with for this week. I'm not yet convinced that this is like the high of the week. I'm thinking that maybe we could see something that Thursday and Friday could send us up into here. If it doesn't, if it needs to trade back down in here, so be it. That's the reason why I'm hands off. August doesn't have the volume. There isn't a whole lot of interbank flows in the month of August to support sustained price moves. So keep that in mind. In your journal, just make sure that you understand that there isn't a whole lot going for the month of August. But when we start going into the September, October, November time period, things get a little bit more liquid and a lot easier for liquidity to be targeted. On the hourly chart, you can see we traded up into that high. We slipped lower, ran the short-term low here, closed in part of this buy-side imbalance, sell-side inefficiency, traded down into the order block. I'll leave this for your annotations in your own chart. Draw that out in time, you'll see we hit that. Order block. I want to see it try to trade back up in. Now, one of the things I'm looking at is, do we rally from here, come back up into here, and this as a breaker? Because if we hit this breaker here, trading into this sell-side imbalance, buy-side inefficiency, if we hit that and then we start to accelerate with large ranges, then I'm probably going to concede and say, okay, we probably need to come back down into here. And while that's not a whole lot of range, it just means that we have to put this run on this level off for a little bit, maybe into next week or if not longer. 15-minute time frame, dollar index. You can see we had fair value gap in the form of buy-side imbalance, sell-side inefficiency. We traded low here and one more time here, and now we're consolidating around that old volume imbalance premium high. Notice how we left these relative equal highs here, and the high itself hasn't really been swept that much from the daily chart either. So I'll counsel you to look at your own daily high. Mine's registering at 93.19 and 1 pipette, so to me it looks like it still could go up there. This here, this decline, might be just simply attributed to the summer volume, okay? And they're attacking the sell stops below here and here, and I like that. Remember, I teach that before there's a really pronounced price move higher or lower, I like to see them take the stops, and that might be what we're seeing here. It might be just simply them coming back down and taking that. Now, if we take out this area over here on this time frame and just go through it and come back up in and act as resistance, in other words, we have a buy-side imbalance, sell-side inefficiency, put your level from here and here and extend them out in time. If we trade down below that and come back up and it offers us resistance, that might be indicative of a deeper retracement on dollar index lower. Euro dollar daily chart. You can see we had a little bit of retracement. I mentioned that we need to come back up into this area and retrace. We have a small little fair value gap. It traded almost to that, fell short of this low, but nonetheless it traded up into it. So I want to see the attempt for euro to trade lower in that higher dollar and attack this sell side liquidity pool here and make an attempt to get down in here and upset this sell side liquidity and get in sync more or less with pound dollar. On the hourly chart for euro dollar, you can see we just fell short of that daily low, which completely closes in the fair value gap on its daily chart. We did trade up into this range here. I was watching it intraday. I wanted to see it completely close that in. It didn't do that. So it could punch up there one more time, get like a 3 drives high, and then if it fails, that would be good. I'd like that, because if it goes higher like it has here, and then goes one more time, completely closes this in, then breaks down, I would not be looking at this area to support price. Whereas if we keep this high and higher high and don't go higher than this one, and we break down, this area still needs to be considered as potential short-term support. So it could come down in here, hit that, and come back up and fill any inefficiency, but it runs the risk of running through to rebalance there, which is again synonymous with low volume in the summer trading. So it can start gapping around and getting these areas they left untouched, because there's really no higher time frame bias that's being utilized, or narrative I should say. So it's basically a short-term area that liquidity would be purged. All right, Euro-dollar 15-minute time frame. You can see we just fell short of that. In here, while this high is the high, not being traded higher, watch this level here, because we could trade down here and then run up and take that out and fill in that entire fair value gap, as I mentioned on the hourly chart. Otherwise, if it just runs right up in here, then I'm not so concerned about this area here. I think it would trade down through it, and maybe if it acts as resistance, that would take us lower, and then reaching into that lower daily swing low for the sell side liquidity pool for Eurodollar, and then maybe work towards that relative equal lows on its daily chart. All right, lastly, British pound versus US dollar. I mentioned this pair could potentially trade like this. See how it's traded here? That's what I think we're going to probably do. We've already done the upset on the sell side liquidity with this past lower. Then we traded higher. We've worked out the buy side liquidity there. Closed in this area here. Didn't quite get down to the order block. So I'm allowing for that in my analysis. It could trade down to that level there, but I don't think it needs to go below that. So the opening price on this candle, we'll just call it 137.50. Okay, I don't think 137.50 should give way, and I think it'll range between that and 139.50. Does that mean there's trades if you're trading on a 1 and 5 minute chart? Yeah, I guess so. You could scalp that, but my question to you is, do you really want to be doing that, or do you want to be operating and engaging when the market's really liquid, putting all of your focus and energy in times when the market is really predisposed to move and you can clearly see where it wants to go? Whereas right now, the highlight of what I'm trying to teach this month by keeping my commentary light is by teaching and preaching by example. I don't like to push it in August because it's so iffy. It's so, well, it could do this, it could do that. And you know I like to co-sign and say where I think it's going to go, but I really want to preface it by saying that I'm probably going to be more wrong in the month of August if I try to tell you every single day where it's going to go. So because most of you are developing 2021 group, I've had this in the beginning when I first did the mentorship in 2016. Folks would come in and I would give my opinion about things, even in low probability conditions. And they ran away quickly thinking, oh, well, see, he sucks. He doesn't know what he's doing. When it's just simply me going through the motions of this is what it's like for you while you're developing. I'm telling you, and I've told you pretty much this entire month, that I'm not trying to push the envelope here and try to prove anything to anyone. I've already done all that. This is a month where historically and seasonally, I don't do a lot of trading. I don't want to trade in this month because it's not likely to give me a sustained price run. And I'm not talking about trends. Okay, I'm not looking for that. I'm looking for the periods in the marketplace where I can clearly see where it's heavy-handed on a bullish run or a bearish run for liquidity. I'm not talking about trend. I'm not talking about sustained long-term, bullish or bearish market trends. I'm not considering that at all. what I'm looking at is where are they likely to run to next for which liquidity. Whereas in these environments, it's not as clean, it's not easy to pick it out, and that's what I'm trying to teach in mentorship. I want you to think about it like that. If it's not easy for you to determine where it's going, then it's probably a low probability environment. So why do you want to push it? Because of your infancy as a trader and developing student, you feel like it's an everyday occurrence. Traders should be in there every single day, and that's not true. Now, there are many people that do that, but there's also many people that are not consistent or have longevity in this business. I'm trying to help you have those things. All right, and the British pound US dollar hourly chart, you can see we traded down into this consecutive down close candles. That's your bullish order block. We dug into that. I'm going to talk about this low here on the last slide, but we traded down and then rebounded, attacked high, lower than this one. So we have a low resistance liquidity run signature. Not that I called this, I'm not suggesting that, but notice how I had really easy price run all the way up to and through here. And it had a higher high here. And I want to see, do we reach back into this area here, or do we trade higher to punch in to get this buy side liquidity pool there? I don't know. And because I don't know, and I don't have a strong opinion with supportive analysis, I don't know. So if I don't know, that's low probability. Now, I'm not suggesting by what I just said that I always know what the price is going to do, okay? Because there are times that I don't know. And I have spent my life trying to figure out where those periods are. And I've limited to these times of the month of August, January, and December, and like the latter half of November. So again, it sounds like I'm adding more every time I speak, but I know some of you are going to write this down, and then when I get into the month of November and I say, okay, this is the week I historically stopped trading, which is the week prior to Thanksgiving in the U.S. So I leave those weeks to family time. I also let the market do what it wants to do. There are trades that occur in December, and I'm okay with leaving them on the table. I'm worried about that. But as a business model, when I'm looking at price, those periods of the months of August, January, the latter half of November, and the entire month of December, I simply do not engage. So every year when we start talking in the month of August, this is what it's going to be like. So that way you're not surprised, you're not shocked, you're not disappointed. It's not deflating to you like, oh, where's the mojo at ICT? You should be, pointing out where it's going to go, and it goes there. It sometimes isn't that easy for me in August. Sometimes it has in the past, but historically it's not. And just treat this month as a vacation month. You go and do what you want to do with your family, and try not to push the envelope in this month. Pound dollar, 15-minute time frame. You can see we had a nice run here. Low resistance liquidity run signature. Ran right on through that. Came back inside of this buy side and balance, sell side inefficiency. Pressed a little bit deeper, and notice it did not get to the 139 big figure. So this one here, whereas I would rather see euro fail, I'd like to see it fail to go higher, but I'd like to see pound dollar go higher. Because what that would indicate to me is, and what I mean by this is that if we see it higher run and take out this high on cable, which is pound dollar, but we don't see that in euro dollar. If we see that failed higher high on euro and it starts to decline, I would treat that as a correlated pair SMT divergence. In other words, we're looking at the intermarket relationships between pound dollar and euro dollar. And while I'm expecting pound dollar to be in consolidation and held, not permitted really to trade significantly lower, I am looking for euro dollar to go lower. Remember, we have that daily relative equal lows. That's still unfinished business in my eyes. So they can keep this pair consolidated. But what happens is this market runs higher. Traders will think, okay, well, euro is probably going to go up there too. It's just running late. But it won't. It fails. That's what I'm looking to see. And then if it breaks down for euro dollar, that to me indicates an underlyingly weak euro, and doesn't necessarily mean that British pound's a good buy. It just means that pound is used to manipulate, and then you'll see the euro pound probably decline as a result, if that is in fact what happens in the marketplace over the coming days. All right, and our last slide here, we can see the British pound worked lower, as we just shown on the previous chart. And then we have euro dollar failing to make that lower low, as we see in cable. Okay, so by itself, that is a correlated pair SMT divergence, which indicates that euro is signifying that it's not wanting to go lower when cable did. At the same time, dollar index failed to make a higher high. So we have cable going lower, dollar failing to make a higher high. So between cable and dollar, that's USDX SMT divergence. Okay, so when you're looking at the dollar index, and if it diverges between one or both of euro dollar and cable, which is rare, it's rare that it's ever done that. But usually, whatever the dollar's doing, if one, either euro or cable, fails to meet that with a mirror image, if this one went higher, we should have seen lower low in euro and lower low in cable, as we saw here. But notice we didn't see a lower low on euro. So we're seeing both things occur here. We're seeing correlated pair SMT divergence between euro and cable, because this lower low should have been seen with a lower low in euro. Notice it didn't do that. Then add to it that we had a failed higher high in dollar index, whereas we had a lower low in cable. Because think about it like this. Cable going lower should be seen with a higher price in dollar. But if there's ever a crack in correlation between that, as we're seeing here, that's indicative of a shift in market structure. It's a change going on behind the scenes, like or change in the underpinnings of the marketplace. I'm plotting this as a line chart on the high. Okay, so this line is being plotted on the high of dollar. Euro is being plotted on the low, and cable is being plotted on the low. And this chart just is being used to highlight that there's a small little crack in correlation right in there. And the only thing that really occurred this morning was at 5:30 or so, there was the European bond auction that came out. And maybe that was the influence, maybe it wasn't. I'm not going to attribute all that much to it. All I know is that we were questioning whether or not it needed to retrace into its decline, because it was already pressed into a discount for euro and cable, and we had a little bit of a pop here. Do we see Wednesday creating a short-term intermediate-term high, and then we roll lower? Same thing with euro and higher prices on dollar index. I'm leaving room for it. If I'm wrong, I'm not really upset, because I've already told you I'm not trying to put any trades on. I'm not trying to do anything. It's just staying close to the marketplace for being close to the marketplace sake alone. In other words, keeping myself in the rhythm of reading what the real market price is doing. Whereas if I took a whole entire month off, first of all, you guys wouldn't appreciate that. But it would also create rust in my analysis. In other words, I wouldn't feel so close to the marketplace. Whereas I feel close to the marketplace, but I also feel that there really isn't a whole lot going on right now that I would be engaging in. So it's a matter of using my experience, forcing an interpretation with limited commentary, so that way I'm engaging you, but I'm not pushing you to maybe take a trade. Okay, and that's really what I'm trying to balance here, because I do not want to illustrate something in a chart or speak on something that elevates your interest or piques your interest in something that you probably were waiting to speak on, and maybe that's going to be interpreted as a little nudge on your part that I'm co-signing without saying, yeah, that's a good idea. I don't think that either higher or lower is probable. So that's what I'm trying to say. Like, we're in a position, or condition rather, of waiting for more information. Okay, it's a little discouraging for developing students, because you want wizardry, you want calling highs and lows, and where is it going to go next? But if the market's going to be held in a position that it's not likely to do that very easily, higher run or lower run, and it's easy to determine which side it's going to run for next, immediately next, that is where you as a developing student grow in your maturity, because you aren't going to have me forever. I'm not going to be here for in perpetuity. Like I'm eventually going to retire. So at some point you're going to want to know these things on your own. So I want to practice them in front of you, so that way you know that there is nothing wrong with having no opinion, no bias, no setup. Despite the market moving around, it does not mean that we should look at it and say, oh man, I missed this move here. Or he didn't get this move right here. Or you didn't see this move here. Or maybe you did see this move here. My point is, try not to read too much in the month of August. Treat it like January. It's just volatility. Yes, there's opportunity, but that's for someone else. Okay? I'm okay with leaving whatever transpires in these months on the table, and you're finding by watching the entire 12-month analysis that you get with me that we can still see a lot of moves, and we don't need the month of August. We don't need the month of January, and we certainly don't need the month of December. Okay? You can do very, very well with a few months out of the entire year and simply just trade with seasonal tendencies, looking for high probability trades with the intermarket relationships that agree with these seasonal tendencies, and those being in spring and in fall, and working within those longer term trends. But in the month of August, things can go haywire because it can just do a lot of ranging, choppy, listless trading. And that's normal. That's a normal thing. It's not that the algorithm is broke. It's not that my concepts are no longer valid. It just means that this is when, like if you look in the U.S. calendar, there is no national holiday in the month of August. And my belief is because they want people to spend their money on vacation. But we'll be right back in the swing of things with, the typical monthly holiday that people are engineered and programmed to spend and waste money on. So this is where everybody's attention is. It's vacationing, it's preparing, okay, for the fall months because school comes back in session, college goes back into its fall session, and the final quarter of the year where everybody tries to squeeze out profits corporately. It's all those factors that come in. So the month of August is kind of like this quiet little period where don't demand too much. Yes, something might pop up once in a while and have a really wild price action move that you may or may not see coming. And even if it happens, don't read too much into it. Don't beat yourself up about it. Don't say, oh, I should have seen that. No, you shouldn't have. You should be relaxing and letting yourself just prepare mentally, financially, and get organized for the coming fall months, because that's where we really focus and that's when we really shine. So until talk to you tomorrow, be safe.